Hello guys. This is Abu Abdullah. In this tutorial you can learn moving average trading strategy for binary and forex trading.
A moving average indicator is a main indicator that shows price movement direction. When processing moving averages, the mathematical pricing average of a particular period is measured by candlestick quantity. For example, in order to calculate the value of a 5-candlestick period, the indicator divides the sum of their closing values by 5. Then, the indicator moves one candlestick forward and makes the same calculations. In this manner, a trader can build up a line of resulting values that has a more smooth chart direction. It smooths price bursts by indicating the current trend. In case of an increasing period, the price sensitivity lowers, but lag on the price chart increases. In the indicator settings, you may choose the period of the candlesticks, and from among 4 calculation methods. The simple moving average, or SMA, is an average arithmetical value for a given period. Exponential moving average, EMA, smoothing works by taking into account the current average value on a previous period. With smoothing, the priority decreases exponentially and never equals 0. The weighted moving average, WMA, assigns top priority to the current price. Hence, the WMA chart does not depend heavily on dated prices. The priority of importance decreases linearly. The smooth simple moving average, SSMA, takes into account a large amount of candlesticks throughout historical quotes and is much more smooth. Moving averages is a great instrument of detection for a lateral trend wherein rules of trading that differ from rules of trend trading take precedence. Moreover, when two indicators with different time intervals intersect, it helps determine trend reversals.
Moving average trading strategy is well known and fairly common. It is a simple trend-following strategy that is determined based on the moving averages that are being used. A triple moving average trading method involves using a very long-term MA, a medium-term MA and a short-term MA. The moving averages can be exponential or simple, depending on a trader's preferences. As for values, the general combinations are 200, 100, 50 or 100, 50, 20 or 10 depending on the time frame. Of course, there is no specific rule on the values, periods, of the moving average, and it is up to the trader to decide what values to use. Understanding the moving average system. Moving average trading system is based off buying the dips in an uptrend or selling the rallies in a downtrend. Trends are determined as follows. Long-term MA is above medium-term MA equals uptrend. Therefore, buy the dips or retracements when the short-term MA signals a bullish crossover. Long-term MA is below medium-term MA equals downtrend. Therefore, sell the rallies or retracements when the short-term MA signals a bearish crossover. The above rules are very simple to understand, and as for the stop loss and take profit levels, it is up to the trader to decide how they want to place their levels. It could be a trailing stop or a fixed RR setup. There are many articles and tutorials, and even EAs, that cover this rather simple approach to trading. But here are some unique ways you can pick up on potential buy and sell signals. For the remainder of this article, we will use 100, 50 and 10 EMAs. EMA, the 10 to 100 crossover. Long or short signals are generated when 10 and 100 EMAs interact. However, this is not a signal to immediately enter the trade. A perfect 10/100ths crossover buy signal occurs when all 3 EMAs are previously bearish, or bullish in case of a sell. Then, the 10 EMA makes a bullish crossover on the 100 EMA, but the 50 EMA is still below 100. Look to the chart below, which illustrates a false sell signal and a perfect buy signal. Now that you have identified a perfect buy signal, the next step is to plot the highs and lows of the candle which triggered the 10/100ths crossover. Then, wait for the 50/100ths bullish crossover and wait for price to break out or close above the range high that you have selected. Go for a 1-to-1, 1-to-2 and 1-to-3 RR setups and move your stop losses accordingly. There is a bit of flexibility that you can allow for yourself. The next example shows a sell signal where we go short before the 50/100ths crossover. The reasoning behind this sell setup is due to the nature of the slope of the 50 and 100 EMA. If you had to wait for the 50/100ths crossover, you would have missed an entry, although there would have been other ways to trade. In the above example, we go short on the breakout from the candle's range low. At the time of entry there was to 50/100ths crossover, but the slope of the EMAs suggested that there would be bearish crossover. In this example, however, the trade would have reached T1, T2 but T3 would have been stopped out near T1. Still, the setup offered a very good RR. Not all setups are created equally. The trick in trading this method is to allow yourself enough chart time to be familiar for this pattern to play out. Not all setups work out exactly the way as defined. The first chart below shows an example. Here, after we set the range on the 10/100ths crossover EMA, price takes a while before triggering a signal. Of course, you could have entered long on the breakout from the first level, or you could have waited for the second retracement. Regardless of the trade entry, notice both the trades moved in your favor. And in some instances, the trade is not triggered at all. The next chart below shows a short signal that quickly reached up to T3 while the long signal did not trigger the setup. As outlined in the above examples, this unique way to trade the triple EMA offers an objective way to trade with a controlled risk/reward setup. Why does this setup work? If you have asked yourself this question, chances are that you are thinking on the right track. This trade setup worked because of momentum. When 10 EMA cuts across, 50 EMA first and 100 EMA, it signals strong momentum in price. Thus, based on the dips or rallies that occur later, the trade can be entered safely in the direction of the momentum. In the next article we will explore another way to trade the triple EMA trading strategy. Until then, practice, practice, practice. For find out top binary and forex brokers list, check our video description. Also, you can visit our website smartearningbd.com. If you're any question you can comment below. Thank you.